Great, thank you. I'd like to invite up our final panel to the stage, please. After this, we have some cocktails we have scheduled for 4:30 p.m. We're going to try to end right on time. I know some of you have dinners and flights to catch, as I do, so we're going to try to keep it right on time and get into the networking real soon. If we can ask you guys to step out, we're going to start the next panel here. Anyone who does want to network, if we can have you step outside the room. We want to make sure and get the next panel started in the next 1 or 2 minutes here so that we're not delayed. And if as we get started here on the next panel, our panelists will see there are some cards on the seats we're going to be using in just a minute. We have some cards here on the seats that you guys can all use during this panel. We'll be using them in a couple minutes here. We're going to be rating some one-liners on stage. I'm going to read them off and you give people a rating. So we're going to make this discussion panel a little more interactive than most of them. And a little more helpful, so it's not just 5 to 6 more experienced investment professionals telling you how they do due diligence or how they structure things. We're going to get some candid opinions from them on some one-liners and some positioning statements from the audience that we collected before the event. We're also going to go through 3 or 4 real quick questions here at the start to get their opinions and feedback on how they operate and in a way that can allow you to get more deals done with them. So the topic of this panel is Pitch Me. Investors want deal flow, but they can't respond to everyone. Lots of times there's frustrations in getting replies to emails, getting voicemails called back, etc. So we're just going to jump right to the first question that most people are most interested in, which is exactly what are you looking to invest in and what type of deal flow would you value more than anything else? And just to keep it moving fast, it's like you to keep it to one sentence, because the more specific you are and the less of a paragraph answer it is, the more that likely you are to get that from the audience here. Why don't we start down at the end of the row here?
So what am I looking to invest in?
Yes.
So I have a background more in technology, so I tend to look for businesses that I understand. So something in the tech field. I look for recurring revenue models. I like models that allow people to earn revenue without having to always have a new customer to bring those new revenue dollars in. Also, I'm a fan of scalable. I use an expression, scalable beyond borders. So I'm, lifestyle businesses or local businesses can be great businesses, but from my perspective as an investor, I look for businesses that can scale beyond borders.
Great.
All right, so by us, we're looking for buyouts in different strategy right now, and buyout and turnaround, large and mid-cap, and then emerging. And then we also invest along our families and through the network of our family on trusted relationships. And here we're sector agnostic and stage agnostic. It depends on the situation. And so we're looking for great founding team with passion, who have the expertise, who have the board that goes with it, who already built their team, who have a little bit of traction, and are conscious about their competition, direct and indirect, and are also conscious and kind of candid about the challenge that they have, and
Sure.
speak to us about that.
Okay. And Nick, what about with your single-family office? Should start in a second after you start talking if the light's on.
We have a pretty
Oh, you can switch.
Thanks, man. We have a pretty diversified portfolio in public equities and fixed income and real estate, but we are under-indexed in venture and particularly in startups. So we're looking to invest not just directly in startups, but in new venture managers as well as fund of funds, and we haven't set up the distribution thesis between them. Within that sub-asset class, there are 3 hypotheses that we have done some research in. One is we strongly believe that there is a liquidity crisis among late-stage founders, and there needs to be a correction in that. Second is we strongly believe that the real estate mortgage And the classic way in which they're issued and traded in the secondary markets are up for renewal and change, and there's going to be some market capitalization created in that process. And the third is public accounting. It hasn't changed in the last 150 years, and we think it's up for a renewal and change. So if there are venture managers or fund of funds or direct startups in that, we are interested in talking.
Great, thank you.
So I'm part of Johnson & Johnson, the broadest healthcare company. So, and I'm part of the venture capital arm. So we invest across healthcare, to be generally honest, and we're stage agnostic. We have $2.5 billion under management, 150 portfolio companies. My specialty is in medical devices, specifically around the operating room. So I spend a lot of time in operating rooms, as well as looking at technologies that can operate in there.
Great, thank you.
Hey guys, I'm Amrit Saxena. My background is I founded and exited a couple of enterprise AI software companies, and I've been an active investor in the AI space, early stage, for a number of years now. What I'm focused on investment-wise these days is I've been building a private equity firm focused on acquiring low-margin, human capital-intensive businesses that could benefit from automation AI technology. So I'm spending a lot of my time looking at atypical companies in the context of Silicon Valley venture, but where we can leverage Silicon Valley venture innovation to drive a lot of value and transformation.
Great. Dan?
Hello. First of all, I'd like to thank Richard for the invite. Dan Galvanoni, DPG Investments. My family was behind telecomputing success Telzon Corporation out of Akron, Ohio. We took 90% of the barcode reading space. Rolled up about 30 companies, and then we formed a dual family office, and then at 22 I formed kind of a specialty finance private equity firm. I was a VC for a while up here with some major investors. We didn't do that well. We're a multi-strategy business. We like distress, we like real estate, and we like specialty finance and specialty credit. We probably put out $2 billion of private equity. We're aggressively looking for opportunities, and we have other very large families and institutions behind us. We're doing deals as big as $250 million to as small as $1 million.
Great. So now we're going to go through some quick questions down the line. Should just really be a 1 or 2 word answer here, but we'll start with you, Dan, and just go down the line. How many of you use LinkedIn to network with potential investment managers, independent sponsors, deals that you might allocate capital to, either looking for thought leadership or new connections in the investment management space? Kind of a yes, no, or sometimes, I guess, type answer down the line.
Yes, for us, we put out about
100 million through LinkedIn. Cool.
No for networking, yes for diligencing.
Great.
Ditto.
Okay.
Yeah, no for direct investments, yes for diligence, and particularly if there are common connections and other funds that have invested in you, we're definitely going to call them up.
I would say no for due diligence, but yes for networking. I mean,
Sure.
I'd say yes on both networking and due diligence.
Right. The report I'm about to state is a little bit biased because it came from LinkedIn, but it did a study and an analysis showing that 76% of institutional investors use LinkedIn to look for new investment theses, ideas, managers that they should be allocating to, and these are institutional investors who have the toughest checklists and are the most picky and big, usually thorough due diligence processes. So I think that is interesting, and it's going to combine with the next 2 questions here, and then we'll get to the point of this line of questions. That how many of you receive meaningful thought leadership that's just genuinely valuable in the mail, not in your email, but someone's taken the time to print it out and mail it to you to get your attention about their investment manager, their investment strategy, their real estate firm, et cetera? How many of you get more than a few pieces a month, or even or want to comment on whether you get mail like that or not?
We only get them after a meeting, so no, not much.
Sure. Anyone else?
Few pieces a month, generally not that valuable.
And you all get probably 1,000 plus emails a month?
Yeah, and most of them are BS.
Right. Most of them are pitching you and not adding genuine value is the other half of the problem, right?
The best value is in hearing a counterintuitive perspective to a thesis, and very few managers actually take the time to distill their thoughts down and write to a LP or an investor on why their counterintuitive hypothesis holds some strength, and that's extremely well needed. So please do that if you're not doing it already.
Right. It's interesting that nobody is really doing that. And I think that Dan Kennedy says if you're not sure what to do, just look at what everyone else is doing and do the exact opposite. Like stop emailing 500 investors hoping some will reply and actually add value first and send something old school in the mail. If they're not worth paying $1 postage to send it to them, then why are you communicating with them? Why are you trying to, communicate with them at all?
Richard, I'll add one more
Go
thing
ahead.
is that we as investors have FOMO. We don't want to miss out on the next big thing. We don't. Our job is to allocate capital. So we read your email. So don't send us email every 2 days, asking if we read it. But if you're not going to add real value, then might as well not send it. Exactly what Richard said. So
I would add that there's very few thought leader in the world, and we usually use our GPs that we work with, that we know are able to generate that thought leadership. That's the one that retain our attention in general.
Great. Thank you. We've reviewed 320 pitch decks now with members in the Family Office Club. If you just became a member, you might not know that one of the benefits of membership is every 3 months you get to submit your materials, and then I'll look at it and we'll write up a 2 to 4 page analysis of if we were in your shoes, this is what would change on the website, the pitch deck, the one-pager, we wouldn't do this, maybe work on this or that, etc. And it doesn't cost anything extra. It's just a way for us to get to know you, because during the cocktail networking hour, I don't get to meet a lot of you face-to-face or during lunches, etc. And in that way, we can help make connections between members, as we can. Again, we're not placement agents or investment bankers. But what's interesting is that while reviewing 315 pitch decks, plus the thousands I see otherwise in my inbox, nobody has a video of the founder with 90 seconds or 3 minutes on here's our strategy, here's me being articulate, committed to my space, talking intelligently about our unique design, our 4-step process to add value on ground leases or stem cells. 0 people have done that out of 315 pitch decks reviewed. 2 people had videos, but they are a little bit more commercial kind of overview videos on their industry, and they were educational. And I just want to comment on that if you've seen anyone that's making a good use of videos or any comments on advice to people in the audience who want to take action on that and to create better relationships with investors like you.
So if you're going to send a video, one, make sure it works. I can't tell you how many videos I've gotten sent that actually don't work, and that's an issue. But I would say in the healthcare space, we see it a lot, actually. And it's actually really helpful when, if it's an intervention inside the body and they're trying to tell us how the device actually works in the body, it's actually good to visualize it. So I think it depends on context. If you're doing something in real estate, maybe you don't need to send a video of a building or whatever you're doing there. But in healthcare, it makes it makes it a lot easier to invest.
Sure. And devil's advocate, I would suggest that walking, if you're allowed to, walking through a self-storage facility you just acquired, or showing the actual location at the highway crossway where the office park is you acquired would be very helpful to some real estate people. But yeah, it's interesting that you do see it a lot in healthcare, because most of the investment industry is about a decade behind on using video and social media, it seems like.
Can I make a
Sure.
comment? So we run a couple of accelerators for startups. One of them is local here in the Bay Area. One is virtual, so we service mostly global founders outside the U.S. And one of the requirements for us is to submit a 7-minute pitch. So we actually do get a 7-minute pitch from every member that comes through. The other thing we recommend a lot, if you're going to send out a pitch, like an exec summary or a pitch deck to an investor, we actually have them send out a narrated PowerPoint. So they do get, it's not quite a video, but it's more in that direction than not.
Yeah, it's a really good idea. And on your healthcare video comment, you talked about here's how our heart device works, maybe showing the mechanics of it and the parts of the heart that maybe, unless you're a cardiac doctor, you don't know. I found that also, though, if you can make a personal connection, if you're raising capital, it's about trust and high conviction. So to combine the two, and we did a whiteboard animated video for Centimillionaire Advisors. I said, hey, I'm Richard Wilson. I run Centimillionaire Advisors, and I draw out real quick what I think about the ultra-wealthy direct investing space, and then I turn my back and start drawing on the whiteboard, and then someone who's much better drawing than me does the whiteboard animation video, and it kind of connected personal with something that's much better than just watching me talk for 3 minutes. So it's an idea maybe some of you could steal and use for your own firms.
I would say on a practical standpoint, we like to share pitch decks, etc. So if it's the video is embedded in the pitch deck, can create problem because of the size of the file, and we
Sure.
whatever. Now there's link, there's things. So it's interesting to see a product, to see a context, or to have a gut feeling about the team and the way they pitch and their passion
Sure.
to do screening, I would say. But practically, it has to be light.
Sure, sure.
Yeah, to David's point, don't embed your video in an email. No one wants to forward a 75 meg email to all their friends. Put the YouTube link out. We're never going to steal your pitch. It is yours to keep. But immediately after we like a pitch or a video, the first thing we start doing is start making reference calls. So one of the most proactive managers I worked with, there were 4 GPs in a fund, and they all included 10 email addresses of their previous bosses or colleagues they worked in after the second or the third email. So that's also very helpful.
Great, thank you. In a minute here, we're just going to do something to make it a bit more interactive. We're going to read some one-line descriptions of some firms that are here in the room or submitted them before the event. And then I'd like you to rate them not on whether you personally want to invest in the company, but just when you hear the one-liner after seeing 1,000 pitches maybe per year in your line of business, does it sound articulate, somewhat unique, specific, clear about what they do? Or are you completely lost and this one-liner needs a lot of work because it really is not well constructed and sounds like everyone else who runs a hedge fund or real estate firm, et cetera? And the reason I want to do this is because somebody earlier on the discussion panel said you have 1 or 2 seconds to get my attention, otherwise you're gone. I've had people say 15 seconds, 1 sentence, the first sentence of your voicemail, otherwise I'm hitting delete if it just sounds like a random sales pitch. So I think that sometimes people undervalue the importance of being highly intentional of how you're trying to be valuable to a potential investor. And I think what I found is that investors like this because they want you to be more concise. It saves them time. It makes their life harder when they have to read whole paragraphs to figure out what he could have said in a sentence or two. And so I think it's good for everyone if managers get better at forming these one-liners. So we have cards here. I believe they're 1 through 10 today. There's 1, 3, 5, 8, and 10, I think it is, that they can hold up and give a rating. And the whole point is to help the people who submitted these to make them better, but everyone else here in the room to also learn from it for your own one-liner for your firm. So here's the first one. I am the founder of Nuvasive, and I put $6 million of my own cash into a low-cost spine navigation technology that I would like you to consider investing in. So is that clear, articulate? You know what they do? You could see how it could make someone interested if they're in that space. And does anyone want to comment on why they maybe gave it a 3 or an 8?
I was the highest at the 8 because investing personal capital obviously shows a high degree of conviction, and I would like to hear more about what they're saying. And it's not I'm going to invest no matter what, but this is a follow-on to, yeah.
Sure.
Just give me a little bit more, right, about what you're doing in that space.
Sure.
It's a little spine navigation. It's a little vague.
Sure. Yeah, I know the worst one-liners are when they say we're a private equity firm boutique in New York, and you have no clue at all. And a lot of people say that, or we're a long-short hedge fund, or we're a real estate investment firm, and that's how they introduce themselves. But then, it doesn't mean anything, right? This one I can tell already is a little bit long, but read it off here. Catapult is a seed-stage venture fund spin-out formed by highly successful alumni of top Silicon Valley VC firms that is leveraging the arbitrage opportunities of investing in the best startups from Tier 2 markets outside of Silicon Valley, where valuations and operating costs are dramatically lower and where capital remains underallocated compared to Silicon Valley. Anyone have a strong opinion on this one that they'd like to share?
Said every other VC firm ever. Everyone's trying to move towards the Midwest or the Southeast or some other regional area, and as investors we all know that startups are going to come from anywhere and you don't know where, but more importantly it all depends on your proprietary sourcing hypothesis. If you're a Silicon Valley VC and not willing to get on a plane to go to Memphis or Melbourne to source the next best startup, then we're not investing in you already.
Right.
I mean, I think it's pretty clear overall. So maybe there's a lot of people doing that, but I like the reference to the background of the founder, like
Sure.
there has been, because that's important, and it's pretty clear, but it's a bit long,
Right.
maybe, and that could be a bit more precise in terms of areas of investments.
Right. If anyone else has a one-liner this long, try to chop it in half. And anytime you're saying, like the word Silicon Valley 3 times here, that's almost a sentence in itself with those 6 words. So Try to never repeat words in the one-liner. The whole point is that you only have a sentence to get someone's attention, so every word has to carry weight to it. And as you're creating it, there's probably some words have to be in that one-liner. So working that over in many different versions, I think, is important. Godefas Capital Management LLC primarily seeks to invest in turnaround opportunities where technology or management improvements may arrest declining performances and trigger momentum. Great. No 10s or 1s yet. Either guys are too nice or you don't love any of them yet. But does anyone want to comment on that one? I guess you rated it pretty high.
Yeah, I mean, sounds like they have deal flow. I'll listen to them and see if they have it.
Sure. Anyone else want to comment before I move on to that one? A lot of middle-of-the-road ratings. Table Rock Capital assists high-net-worth individuals and families to diversify into low-income, affordable multifamily investments that benefit from stable, in-place cash flow and creative upside potential. So multifamily is tough if anyone in here is in that space, because there's so many of you out there investing in apartments. How do you make it sound unique? So why don't we hear from someone who thinks they see a lot of real estate investment firms, or what you liked about it? Because you got three 8 ratings there on the panel. Go ahead.
Very simply, I would just say it's clear to me what they're doing.
Sure.
So if I need to know what they're doing, I get a sense of what they're doing.
Sure.
Not saying I love the space, but I know what they're doing.
Right. Great.
Yeah, but we don't know how they're doing it differently from the crowded space where they are. So.
True, yeah. I would just add that it says creative upside potential. If it could be made more tangible about what that creativity is. Everyone thinks they're doing something creative, but then sometimes I find that they're new, and what they think is creative. Like somebody sent us through our pitchdex.com agency, they said our unique aspect in the industry is we invest in apartment buildings, but we put up 10% of the cash, and we get cash flowing buildings, and we look for places with good demographics. And like you said, like every other VC says, like every other multifamily firm does. That just means you're a multifamily firm in planet Earth in the United States. It doesn't mean that's your unique attributes, but they thought it meant that's what was unique. So I think having that perspective and bouncing this off of investors to see a lot of deal flow in your niche is really important. We are JDI Ventures Real Estate, located in Southern California, acquiring existing conversions and new self-storage developments nationwide, utilizing our combined years of industry experience in building and development while creating a good return of investment for our investors who are seeking recession-proof deal flow in today's economy. Anyone feel strongly that wants to comment on that one?
I've lost count of emails where managers say they are uncorrelated. If everyone's uncorrelated, then where's the correlation coming from?
Right.
So recession-proof, uncorrelated, we hear that all the time. So think deeper about how that's really working out for you.
Personally, it might be because they truly have a national track record already, but I think it adds credibility when there's more focus, like self-storage just in Southern California, and then their expertise has a bucket around it. But also anytime that I have to take a breath while reading it, it's not a one-liner. It's a mini paragraph and a run-on sentence. So I think that getting it so it could fit on a business card or almost in the subject line of an email and be the one-line voicemail that you leave, I think is kind of a critical thing. Anyone else want to comment on that one?
I don't know how you do a one-liner to describe that like precisely and to get interest, to be honest. That's pretty well described to me. Maybe there's a bit wide because it's nationwide, but they have a track record. I mean, there's some elements that are interesting in it already.
Yeah, in helping the 39 clients through pitchdex.com with their one-liners, we've found that if you can say something that none of your competition is saying or they can't say it, that is very good, because then it's going to stand out to the sophisticated investor. For example, one of our clients was in mortgage notes, and they've closed 457 mortgage notes over 13 years. And using those numbers in the one-liner made it very tangible. This person's been doing one thing for 13 years, and they've done it 457 times. And you can't say that if you start up yesterday. You could say best in class, creative solutions, blah, 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 but saying you have 24 team members and you've done X number of deals in Y years, et cetera, or a certain number of AUM, I think adds a lot of credibility in our space when you can encapsulate that in a short bit. And at our event this fall, because we have private investor summits on September 24th, we then have one in October, and our 1,000-person event in Miami. At the September event, we're going to go through this exercise on brand names. So if you read the brand name, it's not why they submitted this, but JDI Ventures Real Estate. Do you know that they do self-storage? Do you know where they do it? Do you know why to work with them? We had Family Office Club, and then we changed it to Wilson Conferences for a couple of months, and quickly realized that people want to be part of a family office club, not Wilson Conferences, because it means nothing. And everyone uses a Greek god that if you don't look it up, no one knows what it means, or ABC Capital, or your last name, which doesn't matter unless someone's known you for a decade anyways, and then they'll work with you no matter what you call your firm. And so having a name that actually attracts business, makes it easy, obvious, removes friction, and the best names say what you do, where you do it, and why to hire you. But if it can't, which often it can't, then the one-liner can supplement it. And I think it helps business move forward in a space where everyone's just seeing so much deal flow at a time. XA Investments provides our clients with access to the leader in collateralized loan obligation market, utilizing a new alternative credit fund that's designed to generate a strong level of current income and overall returns that are uncorrelated to traditional investments.
So CLOs are toxic after the '08 crisis. So if you're going to say collateralized loan obligations, say why very, very quickly.
Great. I think it's a good point. I think that somebody mentioned film financing on stage earlier today, and that's another area that just has a bad reputation around it. So I think you have to be aware of the elephant in the room when you bring up certain topics and address it really quick in the same slide, or in the same breath. I think that's a good point.
But like in spite of the crisis, I mean, if you look at the result of hedge funds over the long period, I mean, CDOs and PMBS have done better than a lot of others. So
right. I think people just heard about it the first time during a meltdown, and then in their brain, that's just their one time that they read about it in the Wall Street Journal 17 times in a row over a quarter, perhaps. It's probably why there's some public stigma around the perception of it. It's my guess. Yep.
Yeah, from my vantage point, a common problem with a lot of these one-liners is there's a lot of buzzwords and obfuscation of real hard data. So, if it's uncorrelated, if it's actually doing well, if they've been in the business, they should say what those returns are or why it's actually worth a conversation.
Sure. I don't know if your microphone is working the best right there, but he's basically saying there's a lot of things that don't have tangible numbers behind it, or what their track record is, or what their real experience is. We're just going to share one more, and then we're out of time, and then I'll give the panelists a chance to either comment on the best suggestion for those in the audience who want to be accessing investors like you, that you think everyone is not doing the right way when raising capital and trying to attract family offices and investors, or an insight you have on these one-liners and being able to be very concise to get the attention of investors like you. But let's first rate this last one here. VidDrop is a mobile app and web platform that's bringing the power of video to online shopping. We are like a Yelp meets YouTube for e-commerce shopping. Anyone want to comment on the rating there? No one gave it more than a 5, it seems, so no one really loved it. What would make it better for those of you that rated it kind of poorly?
So pitches that are easier, that says we are the Uber of X or Airbnb of Y, are relatively easy to understand. But if your Yelp meets YouTube meets something else, then you have to, it's hard to understand where the Venn diagram is meeting up and what you're doing. So.
Yeah, that requires a little bit of thinking. Yelps meets YouTube meets Netflix and things like that. It's
right.
Using again buzzwords and buzz brands, let's say.
Right.
It also just doesn't seem particularly differentiated in any way. Video and online shopping have existed together for a long time. What is the competitive advantage here?
Sure.
Yeah, and I think it kind of told us what it is, but to his point, it didn't go beyond. And I think that's where a lot of pitches or one-liners stop is, how are you different, especially in technology places, how are you differentiating what's existing in the marketplace?
Right. Yeah, I couldn't agree more. I think that is where a lot of pitch decks stop. The ones who actually take time to have a paragraph that is pretty concise. Most people don't even have the one-liner, but the ones who have time to to kind of summarize it pretty well, usually are just stating what they do. We buy private equity companies, lower middle market in the stem cell space, and we aggregate those, we improve them with our experience, and they leave it at that. And it's kind of a plain vanilla description of what they do, as if they're telling a family member just at a 10,000-foot level, versus making it really compelling and interesting and unique and making people want to lean forward. Like, for example, with Canopreneur Partners, they have proprietary due diligence processes in a very in-depth, sophisticated way of conducting due diligence on cannabis companies in the marketplace. So that's something, when on the phone with them recently, I said, when you're speaking at this other event that they have coming up, that I would really press that or put together a white paper on that exact thing, because it's something unique as a holding company in the space versus just saying, oh, we invest in the cannabis industry, and then there's no unique kernel there, I found. So if anyone wants to comment on this discussion panel topic of getting access to investors, everyone having too much deal flow coming towards them to pay attention to everything, and has a comment for anyone in the audience to help them be more effective at closing deals with private investors, family offices, or something that you are hoping to get across on this panel and we didn't have time to ask one of the panel questions, I'm happy to have maybe just 30 seconds or a minute from whoever wants to comment, and then we'll round it out for the day.
So here's a more counterintuitive perspective to the one-liners we rated. One-liners that are not as easy to understand actually also help the pitch, because in that case, whoever's pitching stops speaking and allows the investor or the LP to drive the conversation. So how does that work? Why CLOs? Why Yelp meets YouTube? And that is actually a good thing. I heard some of these pitches today, and the pitches where you as an investor are just not talking and constantly hearing a really excited manager or entrepreneur for a very long time are also the ones where you have dismissed them very, very quickly. So you want to not talk. You want to hear a no, or we are not interested in this, as early as possible, or let the investor drive the conversation, because if they keep asking questions and you keep answering them, the outcome's going to be exponentially better for you than the other case, the other way around.
I actually summarize that for entrepreneurs, because again, I'm usually dealing more with entrepreneurs than family offices and whatnot. I usually say, if your lips are moving, you're not learning. Right?
So,
ask questions, get them talking,
right.
Learn something.
So Nick, we talked about this last week in Dallas at the Investor Influence event, and there's a couple of people that were here. If this is your first event with us, we have private investor summits like this 7 times a year. Our biggest one is 1,000 people with 75 speakers on stage. But we also have workshops on investor relations and capital raising, where we go through 120 slides, small group exercises, et cetera. And at our workshop last week, I said, this is going to sound so dumb and simple, and you all think you listen, but the number one complaint of investors when I interview them is no one listens to them. They come in, they pitch for 40 minutes, and they say, do you have any questions? So Nick, in your case, you run a single-family office of significant size. A lot of people would want to be doing business with you. You're saying a lot of people don't listen. They just pitch, and you kind of just turn off to that. Why is it that everyone thinks they listen, but all the investors think no one listens to them? Because it sounds like too common sense of a thing for me to even suggest to people, like I'm wasting their time by saying it.
Yeah, I couldn't agree more, Richard. First of all, the list of questions you had posted on your website, some of them actually scare me. So really ask questions to investors. Really ask them what they're investing in, what their investment hypothesis is. If you're investing in cannabis or collateralized loan obligations or have an e-commerce startup, just say that and stop speaking and ask them, what do you think about this field, honestly? Because you think you're coming into a pitch, you're going to talk for 30 minutes and get a $250,000 check and leave the room happy. That's not going to happen, right? Your best case scenario is the investor recommends it to their colleague who is really an expert in their field, and they help take it forward. That warm introduction is going to help you much, much better. And for the investor to make that warm introduction, they need to finish your sentence. They need to understand your pitch as much as you understand them, and the only way they'll do it is by asking questions themselves. As an entrepreneur or a manager, we respect you a lot. You have given a lot of time and hours into understanding your business, understanding your thesis, but use that to answer questions instead of giving them the answer book in the first, 30 minutes nonstop. Does that help?
Right. I think that is really helpful. And to Andres' point in the morning when he's talking about how important it is to have a manager's contents be visually appealing. The most important part of it is if you can't show a picture of how you've added value to the industry, or you can't say in a sentence, et cetera, and you haven't refined your thoughts to the point where visually people just get it instantly and say, wow, that's really innovative, I get what you do, and it's excellent, then that's where it misses the mark, when you can't communicate in a very clear, concise way, I found. And my most valuable phone calls, like yesterday, we got a cold call in from a family, $14 million in cash, $48 million illiquid, and it lasts 9 minutes. And the next step is meeting in person, and then that meeting's probably not going to last 2 hours, et cetera. And my most valuable phone calls are all 7 to 12 minutes. Very busy, straight to the point, figuring out what the next step is and moving to the next step, not trying to sell someone within an essay email or a very long pitch phone call, et cetera.
And on that point, I think, we do diligence on companies, but you guys should do diligence on investors. Know who you're talking to, know what they've invested in, know what their theses have been. Like, it's out there, right? It's in the space, whatever it may be. Figure that out and make sure that you're prepared on that end when you come into the room, because that'll make a more engaging discussion, right? Because you'll know, hey, if you invested in X, Y, and Z, you can ask and you can talk about why you invested in X, Y, and Z and how that correlates to what you're doing and how you're changing your space, and make the correlations, and it'll make a more engaging discussion. If you sit there and talk for 40 minutes, honestly, half the time most people's phones are pinging, they're not paying attention, they're doing other things. So make an engaging discussion, keep their attention.
Yeah, I think it's a really great point. And almost all the ultra-wealthy have a thesis, their unique strategies, their view on the world. And if you listen first, you can fit in what you're doing with their co-GP preference or whatever, right?
Yeah, and if you don't fit
I would add, so when we are at the level of already the meeting, we've already done some screening before, already checked, maybe called some people, etc. Yeah, the goal is to have a conversation. It's not to get a pitch. There is a culture of pitch here, elevator pitch, etc. So people have like this habit to do that and to go right out the bat in it. But that's not really what we're looking for,
Right.
in general.
Great, thank you. Yep.
Just going to make a comment. You were bringing up LinkedIn earlier. I use LinkedIn a lot. I have a lot of connections, so a lot of the entrepreneurs that I deal with through my accelerators will often email me and say, hey, can you introduce me to so-and-so who you're connected to? We've even taken to the point of templatizing that. They have to send us a template that we've crafted that says, here's why I want to connect to them, here's the things I noticed in their background that I think they would be interested in what we're doing. I recently saw them on a YouTube video. Like, we make them go and do some homework on the people. I think exactly to the points being made here. Do your homework, but we kind of force it by way of providing them a template that almost makes them do that before we're willing to make the introductions.
Yeah, that's great. That's excellent.
I don't know why everybody's talking about LinkedIn. There's not a lot of quality relationships built on LinkedIn to me. Personal. That's my personal experience, and the pitch that we're receiving in general are very quickly dismissed.
Right. I think there's a huge volume of people using LinkedIn, so it's a 1 of 500 thing, just like anywhere else in general, except for a close referral. But we just had a $900 million family reach out 3 weeks ago cold on LinkedIn because they found us on there. So it's 1 out of the 500, type thing, and how to be helpful to a larger community, I feel like. But any other last comments before we round it out?
I think in the end it really comes down to personal relationships. So try to get a meeting with the person, and if someone likes you, it's pretty hard to say no.
Right. Jeffrey Gitomer says the world is unfair, and that's the good thing, because people will do business with their friends more than strangers. And anything digital we talk about, using text messages to get meetings with investors, using video, using LinkedIn, using a paper newsletter that no one wants to bother to use because that's too much effort, even though that's the faster route to actually getting someone's attention, adding genuine value first. All of that stuff is just a conduit and a catalyst for getting more in-person meetings, so you can actually add value first.
I'll just add one counterpoint. I mentioned I run a virtual startup accelerator. I've not met one of my founders, and we've worked with over 100.
Wow.
And it's a paid program. It's not a free program. So they're paying. They're spending 12 weeks with us. I've not met one of them. And we develop relationships, even just through the means of how we're doing it online. So I think it can do it. It depends on the individuals.
Right. Yeah. Usually when you're raising more than $5,000, $10,000, $25,000, many in-person meetings are required. So it's very, very challenging. But that's interesting. I think there's going to be more and more virtual type connections being made every year as people get more used to that technology. So
Don't tell anyone who got married on Match.com that those kinds of relationships don't work.
Sure. All right, well, I know we went 12 minutes into drinks, so I apologize for that. I just thought we were getting some really good content from the panelists. Before we break, Jennifer is here. If you're a new member and you haven't scheduled a walkthrough, please schedule a walkthrough phone call. It takes 7 minutes. She'll show you how to use the portal. Andres is here from pitchdex.com if you have questions about that platform. And then would love to see you at our event August 1st in Miami or September 24th in New York for a private investor summit. Just go to familyoffices.com to see the event schedule. Thank you, and enjoy the drinks.